90% of retail investors are looking at the wrong indicator this week. They are staring directly at broad central bank benchmark interest rates. But institutional money is quietly positioning for a massive multi-billion-dollar earnings shift. Across the US, Europe, and global markets, key market leaders are releasing earnings reports. These reports will either validate this year's tech rally or trigger a sharp correction. We start with Tuesday's early movers setting the baseline tone. Zoom Video Communications drops its quarterly numbers after Tuesday's closing bell. Wall Street is watching enterprise seat expansion versus consumer churn. Analysts expect single-digit revenue growth near $1 billion levels per quarter. Zoom trades at a compressed price-to-earnings multiple compared to legacy cloud peers. But its key metric remains free cash flow margin resilience above 30%. If enterprise retention ticks up due to AI workplace additions, expect a short squeeze. On the hardware side, Canaan reports Tuesday morning alongside medical tech firm Nano-X Imaging. Canaan is a core barometer for global Bitcoin mining rig demand. With crypto volatility surging, equipment sales fluctuate wildly, week over week. Nano-X Imaging needs to show commercial traction for its digital radiography systems. Medical device buyers operate on rigid annual purchasing budgets. If Nano-X shows zero commercial acceleration, retail traders will drop the stock fast. What most people don't know is that Wednesday evening carries 90% of this week's market volatility. Nvidia reports its second quarter results after the market close on August 26th. Wall Street consensus projects Nvidia revenue to soar near $90 billion. That is a 97% year-over-year jump driven by data centers. Net income estimates sit around $51 billion for the single quarter. The critical detail isn't last quarter's past revenue figures. The real trade is data center capital expenditure guidance for late 2026. Big tech clients like Microsoft and Meta have allocated over $200 billion. Investors demand proof that those hardware spends build profitable end-user AI revenue. If Nvidia hints at Blackwell production delays or buyer orders slowing, tech pulls back. But if forward guidance beats, expect a global stock rally across chips. Salesforce also reports Wednesday evening alongside Nvidia in a huge doubleheader. Consensus estimates project Salesforce revenue up 11% to $11.3 billion. Earnings per share are expected to climb 13% to $3.28. Salesforce acts as the primary health gauge for enterprise software spending across corporations. When CFOs get cautious, software seat upgrades are the very first thing cut. Watch their Agentforce monetization metrics closely to see if corporate clients actually upgrade. Hit that subscribe button right now if you want daily actionable trading breakdowns. We deliver concise financial news every morning so you stay ahead of Wall Street. Moving into Thursday, the focus shifts to custom artificial intelligence chips and consumer debt. Marvell Technology reports Thursday afternoon with high expectations from Wall Street institutional desks. Analysts project Marvell revenue to surge 35% to $2.7 billion. Earnings per share are expected to jump 39% to 94 cents. Marvell specializes in custom application-specific chips built directly for hyperscalers like Google. As cloud giants seek cheaper alternatives to standard GPUs, custom ASIC silicon demand booms. If Marvell beats data center networking expectations, it proves AI custom hardware is accelerating. That beat would push Marvell toward new local high-resistance levels. Thursday also brings Iris Energy and fintech disruptor Affirm Holdings into clear focus. Iris Energy tests how efficiently Bitcoin miners transform energy capacity into high-performance computing infrastructure. If HPC hosting revenues outpace crypto mining costs, the stock will re-rate higher. Before you skip to the end, look closely at Affirm Holdings. Affirm reveals the true condition of buy now, pay later consumer borrowing strength. Higher interest rates test loan loss provisions across low-income consumer cohorts. If Affirm delinquency rates rise above target bands, credit extension margins get squeezed hard. But if merchant volume grows while credit quality holds, Affirm shares will rally violently. Watch gross merchandise volume and delinquency provisions side by side on the earnings sheet. The surprising part comes next on Friday morning with European shipping firm Scorpio Tankers. Global trade flows are undergoing massive geographical rerouting due to changing global logistics routes. Scorpio Tankers operates a modern fleet of clean product tankers carrying refined fuels worldwide. Tanker day rates spike whenever spot shipping routes lengthen due to regional transit avoidance. Scorpio's debt reduction execution directly expands cash flow return to shareholders via buybacks. If daily charter rates beat expectations, Scorpio offers high dividend yield stability for traders. So how do you actually trade this massive cross-asset earnings setup this week? The golden rule for beginners and intermediate traders is active risk management discipline. Never gamble full position sizes directly into an earnings release before market close. Instead, track post-earnings options, volatility crush right after numbers hit the wire. If a solid company beats estimates but drops on weak short-term headline reaction, inspect forward guidance. Strong guidance on a temporary price dip offers the best technical entry point. Look out for our next video posted daily to stay ahead of the market.